Canadian jobs report to the earnings parade that has been keeping investors on their toes this week. Grant White is a portfolio manager and investment advisor at I Private Wealth and joins us as part of our opening bell coverage. Grant, it's nice to see you. There's a lot of noise right now. There's a lot of things that can grab your attention as an investor. But at the end of the day, you got to make some decisions for the long term. How are you approaching everything right now?
Yeah, I mean, I feel that's the story of the year. I mean, there's lots of noise out there, and that's kind of the constant, right? Is change and noise right now. I think that investors need to be a little cautious right now, and it's not to say that I'm not optimistic about the future. I just think that we are due for more volatility. I mean, I don't think we've worked out all of the challenges, and even related to the tariff story, it seems that we're getting a little complacent out there. So with all that being said, I think that the next few months are going to be, they're set up for some good choppiness. And I say good choppiness because I think for the right investor, that's going to be a great opportunity. But for the investor that's chasing certain stories, chasing returns out there, I think you could get hurt in this one. So it's wise to be patient. It's wise to look for quality, especially right now.
All right. Now, in terms of the profit picture itself and all these companies that are reporting earnings, has it given you a bit more insight into individual names that maybe you were looking at, maybe you've been invested in, and sort of give you a little bit more confidence on how companies are performing in this sort of wild world?
Yeah, actually, I think that's the silver lining, if you will, or the bright light. There's a lot of companies who are navigating really well, and I think that there's some really great companies where management is really shining right now, and seeing how they're, whether it's a tariff story or whether it's just navigating the environment itself. I think good management is really rising to the top right now, and so you look at companies that are reporting, especially yesterday and today, whether it's Saputo or Power Corp or Constellation or you name it. I mean, these companies' management is still shining really, really bright through this. I'd even, look at Apple. I mean, I think what Tim Cook is doing there although I'd love to see them make a bigger splash in AI, I think what they're doing to navigate the entire tariff situation is looking a bit masterful right now, especially this week. So I think it's getting me more excited about good management, and I think that's what investors should really focus. One of the things they should focus in on outside of the fundamentals is how good is the management and how well are they navigating through these situations, because they're not easy. I mean, a lot of these situations are things that these management teams have never seen before and probably never contemplated in a lot of ways.
Okay, well, and just for the record, for anyone who wants context on Tim Cook's Oval Office appearance, not only did it come with a check for $100 billion to invest in the U.S., but it also included a plaque, a Made in America plaque with a 24-karat gold base. So if Tim Cook is willing to sort of appease the president that way, maybe the board of other companies should think about how they are sort of making peace. But I digress. So you mentioned a few Canadian stock stories where you're seeing some pretty good performance. Let's go with Power Corporation, big company. Arguably, you could call it a financial services play. But shares have had a nice move. Actually amazing to look at that 12-month performance of nearly a 60% gain. And this is a company that you have liked. What has stood out for you?
Yeah, so, I've owned this company personally and for our clients for a long, long time. I mean, it's probably closing on 10 years now. And for the same reasons we liked it before, it's nice to see that the share price is coming through in that, especially over the last year, as you point out, John. I think management has done a good job of putting this company together and stewarding it. I think there's also other factors that are at play as well. I mean, the holding company often trades at a discount to the price of the assets, and I don't think that's a secret to most investors. It's one of the reasons why they don't own the holding company. But I still think that's an advantage because management looks at that as a buyback opportunity. I've come on air a number of times and talked about how I love companies that are doing share buybacks because it not only shows confidence in the share price and then in the company going forward, but it's a nice little yield that most people overlook. And in the case of Power Corp, you're getting about a 1.4% boost in your dividend yield just from the share buybacks. So I think that you're able to get Power Corp despite the run up that we've seen. It's a fantastic company, but you're still able to get it at a really good price right now. And obviously management still has a lot of confidence in that as well because the share buybacks are continuing. And again, the company is looking very strong going forward.
And you also mentioned Saputo, which I hadn't looked at the stock performance, but given all the trade tensions and Trump's constant complaints about Canada's dairy industry, you might think that maybe investors would be shying away from Saputo, but actually they've been leaning in, and Bay Street generally is supportive of the company. What is it that you see in a company like Saputo? How do you feel about it after the run-up that it's had?
Yeah, so I mean, I like Saputo as a company. I mean, and we have it as a hold right now. We're not buying it today, and it's just more of a reason. It's not because it's not quality. It's not because we don't believe in what management's doing, but I think there's still a long way to go and a bit of a turnaround that they're having. I mean, they've had some challenges over the last few years related to pricing and obviously inflation and inputs and operational costs and so on. So they've gone through a bit of an overhaul, since 2023, and I'd say they're about midway through that plan, and I'd like to just see a little bit more of that plan coming to fruition before we have it as a buy. But if you are a shareholder, we still love this company as a quality company. I would hang on to it. It's just we don't see it as an attractive buying opportunity right now for pricing, given what is yet to be seen from their revolution, if you will, in their plan. But overall, the company, again, strong management. The company has shown strong management over the last couple of years, especially in navigating the situations. And so, if I was going to bet on it, which I don't, but if I was going to bet, I'd say they're going to come through this. And if we can find pricing due to volatility that is attractive, then we would switch that to a buy.